Okay, recording this video after close trade Friday, 14th of March 2014. Hope you had a good couple of days trading. Well, nice little sell-off last 3 or 4 days. So look back to the last video I put up, said we're going to have some weakness, and that's exactly what we've had. And I actually think now it's going to continue down a little bit further, and I'll show you why I think that's the case. So 1.3 million contracts traded today. Yesterday it looks like there was only 0.6, but it was rollover day yesterday, and I'm using continuous contracts. So you have to add together the old contract and the new contract, and when you add those together, that was about a 2.2 million contracts traded yesterday. Big volume. Rollover is always a little bit tricky. I always suggest to trade the old contract on a rollover day, and for whatever reason TradeStation rolls to the new contract on the rollover day, and I think that's kind of not the most helpful of things, but anyway, that's what they're doing. So that's a bit spurious. It should be up here at kind of 2.2. So today, now this is where we're at kind of an important level kind of here in the market. Previously it was a support at this pullback to end of trend sequence here, and then we kind of blasted through here, and this was kind of the news over the last couple of days. This was kind of the Ukraine, and then this is Putin is a good guy, he's not going to do anything in the Ukraine, and all of a sudden we're back down to where we kind of blasted off from that overnight news, and now we're at a previous support level that kind of busting through on the downside I think will bring in quite a lot of selling volume. So that's what I'm looking for, and it's driven by not only kind of the news out of Crimea, but other things kind of happening. So we've been talking about the yen carry trade kind of unwinding, and this is a very useful oscillator that looks at overbought and oversold of the E-mini versus the yen. You can get this code for this oscillator. It's on the website. It's free. And we had this oversold level here, and over the last week we came into overbought again with these white bars up here. And this time around, last time we came into this, took us a long time to roll over, because psychologically the market, leading into the Christmas rally and everything was very bullish, and I was talking about after the new year everything changes. So it's like people kind of reset their expectations of what the year's going to be. So having taken a long time for that divergence to work itself out, the next time we kind of come into it, it's more of a pop. It's kind of a quick move up, and it's kind of come down here. So that was our overbought versus the yen, and now the yen has started to strengthen. And if you look at the yen, we've been talking about the yen over the last several months, where this downtrend is over and we're going to have a reversal. So I don't know where it's going to go. Still, the professionals are short the yen, so that's kind of going to they've not reversed into being positive for the yen, but this has got to travel somewhere. And we had a beautiful bounce off Rambo. So pullback to end of trend, and I was saying this little pattern was really shallow, and that was kind of a good thing, that there were buyers kind of coming in here, and then we briefly broke below that support level, but it was being led by the amateurs. Rambo pattern, potential reversal of amateur breakout. The amateurs were getting short here. No, they get wrong footed. As soon as we break back above there, they're in all kinds of trouble. And what we're doing is we're heading to the upside. So we're heading towards parity here, or 100 yen versus the US dollar, and this downtrend is now going to reverse and go the other way. So strength in the yen means that people who are kind of leveraged and got carry trades on borrowing in yen are under pressure, so they get margin calls coming in. If the equities market start to fall off around the world, all of those kind of risk on trades get into trouble and so on, and that causes more repatriation of funds, causes yen to accelerate even harder, and then more kind of margin calls and whatever. So that kind of it's positive for equities as long as the yen is kind of traveling down, and then as soon as it starts to unwind, can get ugly. And we're breaking back up now, so we've got support in here, we're running to resistance on here, we've got resistance due at some point on the weekly chart, but I just think this is we now, after putting in this Rambo pattern down here at 96.5, we're looking above 99 and 99.5, and I think we're going to go above parity, and so that's going to be an important story over the next several weeks. Similar thing with bonds. So again, same oscillator. This is looking at the E-mini versus the bonds, and we had this oversold region here where the bonds kind of the money was flowing into bonds and out of equities, and we got oversold here, and then we've traveled all the way to the other side, and there's overbought. So this is bonds got temporarily kind of oversold, the equities market got overbought. Similar thing, to the yen pattern. We got into last year, it was overbought, it took a long time to roll over, but this was a spike, and now we're rolling over a lot quicker, because psychologically the market is that much more extended and people are far more willing to take profits. and on the bonds we're breaking up into an uptrend in bonds. So temporarily we had a little bit of weakness the other week that was driven off an exhaustion pattern and pullback to under trend. But on the weekly chart, we've bottomed here. It's been amateur driven. It's like Rambo and amateur bars down at the bottom here. It's not been a real kind of clearing out in terms of sell-off, and blue professional bars kind of coming in. It's being driven by the amateurs. I think the professionals will come back in and sell it down again, but we're going to play with these highs and break into an uptrend, and this is why. Because on this last sequence here, these blue professional bars, we've been in this congestion zone on the weekly chart here. The lows of this are not getting broken. We're now playing with the highs. So we start going through the highs. That just kind of shows that was professionals kind of anxious to buy it up. So let's get through here. It looks like a weak bar today, but a break back up continuing through 34s. The money's kind of flowing into bonds and out of equities. Let's wait and see. We've got this cyclical turn here, but in terms of the oscillator, we're kind of traveling down the other way. So the equities are overbought and the bonds are temporarily kind of oversold. So that's kind of the big picture there, and you can see it rolling over in all of the indices. So this is the Dow, where we had that explosive volume. The Dow was the weakest of the lot. The Nasdaq was the strongest. This was the last time around we had explosive buying, bearish divergence kind of come in, and then we came back, and this time we came around into 16,400, and it's all amateur bars. It's like lack of demand, no buying going on here. Bearish divergence kind of comes in here, and now we're falling down. So we're below support on the daily chart. So I'm looking for this to wrap around. The next place will be support on the daily chart, which is slightly different than I was saying the other day with the 135-minute chart, and I'll show you that in a second. So we're coming down to daily support on here. This is the Nasdaq. So the Nasdaq went higher than that pullback to end of trend sequence, but then we got exhaustion, bearish divergence, and a flush pattern, and these blue professional bars kind of selling it down. And if we continue breaking through the lows of that, then that's them selling. And cyclical support is where I'm looking on the daily chart for this. Same thing with the S&P 500. The pullback to end of trend with flush patterns. We came back, another exhaustion pattern and bearish divergence. We roll over, amateur bars at the top there, and now we're kind of getting going on the downside. And this is we're at this kind of important level here, where it was the peak of the market here. And I think we could kind of keep on heading down till we find support on the daily chart. Russell, we've got some time for this has got to loop around and kind of find its way down. No volume on the Russell, so we don't have the kind of volume patterns going on there. The reason why I was saying the other day, potentially support on the 135-minute chart pullback would come in. Yeah, it did come in, but it was kind of an odd. We had that funny bounce, I think, on the Wednesday, and then we just sold off. So this isn't totally the wrong place. If anything, it should be kind of down here, kind of catching this pullback to end of trend. So we're breaking into downtrends because we've not played out a pullback to end of trend on the 135-minute chart, and this is heading down to cyclical support here. The reason why it's not going to hold at this point, so this is the whole move topping out all these lack of demand, bearish divergence, didn't know what to do, just couldn't get anywhere up here at the 1880s. Flush pattern kind of comes in. This is the exhaustion cell kind of getting going. Those are the early guys. These are the guys saying, right, I'm out of here, taking profits, I'm selling down. So they're short, okay, and they're waiting to come back into the market. We've got to see a similar pattern to that during at the end of this sequence, and we're sitting right here on this support level on the 45-minute chart. The last uptrend was nice. Pullback to end of trend, trend move that goes pullback end of trend, and then we fuss around, and eventually we kind of lose it and start traveling down. But we've not got into an end of a trend move. So we got support here that we're breaking through. This is going to bring us down into a trend move. When on a left shoulder, then we'll get an exhaustion pattern like this. So let's see what it is. It's like everybody knows that weekends are when all the Crimea, the Ukraine kind of news tends to get a little bit excited. So, but that's what I'm looking for. I'm looking for this to break on the 45-minute chart into a trend move here, then a trend move on the lower time frame, syncing up with the cyclical support on the higher time frame kind of here. So I think that's the most likely thing to happen next. We didn't bottom today with this activity because this is the selling. We've got to see a proper exhaustion selling on a left shoulder, and we're sitting at support here, just itching to fall off this edge. ledge into a trend move on the way down. This can't catch us. This has been too late in the move, and now we're kind of heading down. So that's what I think is kind of going on. Am I going to show anything else? Today's activity was really driven by the 4,500 tip bar chart. Yesterday, because I'm using the continuous contract, this looks a little bit messed up. During yesterday's trade I was using ESH14, which is the March contract, to trade and get signals. It gets a little bit messy because that was actually the forward contract, and that doesn't really kind of look right. But today's patterns were all support and resistance on the 4,500 tip bar chart. Professionals up here at the highs taking profits, then they kind of go short and then pick it up at these lows up here. Very weak buying, and then we break through a support level, bang, on the way down. We've got to go pull back to undertrend at least on the 4,500 tip bar chart. So we're in a downtrend here, and we've not seen a decent kind of selling exhaustion pattern yet. These have just been flushes kind of holding us at these lows. But now that we've broken through cyclical support on this, we're heading down. We're sitting on this ledge kind of ready to head down. So it was an interesting day's trading. My best trades were kind of a one-shot kill, first thing long 1840 at first thing in the morning. That was my best one. Then there was a nice short one later on in the day, long short 41.25 for 5.5, which was really nice. And then there were some little bits and rats and mice kind of in between. Anyway, I hope you traded it well. Look forward to the next few days, because I think the weakness that I was talking about in the last video I put up, where I said I think we get 2 or 3 days of weakness. We've definitely had that, and now I think that we're going to it's going to continue down even further because we still haven't seen that kind of exhaustion pattern. So daily support, that's what we're looking for next. Hope you're trading going well.